Rest right tight. F left. 372 Y stick Z spot.
Welcome to the Monday Blitz. This is a time where we're going to bring you some quick little hitting articles this week, and we're going to break them down. We're going to highlight them. In today's article, we're going to be talking about Ripple's Garlinghouse says China leads U.S. in crypto regulatory outlook. This is a Cointelegraph article. We're going to go right into it. I've already highlighted some sections for you guys to give you the main skinny points here, and let's go for it. So Garlinghouse expressed admiration for China's approach to the crypto space. In some ways, I'm in awe of it, he said. Cointelegraph asked the question, China sees potential? China's positions comes from an appreciation of crypto's potential. Garlinghouse says, I think they're realizing that some of these technologies may in fact be very foundational for the future of how financial systems work. And they want to make sure that they have capabilities at the heart of them. Rightfully so. And Cointelegraph asks us, regulation gives entities confidence? U.S. regulating bodies came forward in 2018 and 2019 classifying Bitcoin and Ethereum not as securities, but as commodities. Very important stuff right there. And this little short article actually got extended because this piqued my curiosity. I was like, you know what? I don't know the difference between securities and commodities. So we're going to get into that after we get through the rest of this. So such rulings now give companies and individuals more confidence in participation around those assets, the Ripple CEO explained. Today, because of mining control of Bitcoin and Ether in China, these are technologies controlled by China. 25 years ago, the U.S. was a leader in making the internet what it is today, but part of that came from regulatory clarity. Ding, 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 ding. So right now, if you're taking a look at China, you've been paying attention to anything what they're doing and how they plan their country. They are investing in this and they're believing in it. Now, they may not be using it in the right ways, trying to get the digital currency started to track and trace citizens. I don't believe in that part, but they're embracing the blockchain technology and they're saying, hey, we can handle this. We can kind of create the framework that we want to. And, you know, be it or not, US really just hasn't just tackled this. It's kind of been the elephant in the room and they're just kind of like placing band-aids here and there. So it also interesting, I did not realize what really the big difference was between securities and commodities, and the fact that Bitcoin and Ethereum were labeled as commodities, we'll find out, will be very interesting. But also other cryptocurrencies out there can be labeled as securities or as commodities. So I guess it's a case-by-case basis on what the actual project does. But the SEC on this one kind of just like punted it and called it a commodity, which in my opinion, I still don't know if Bitcoin and Ethereum, they seem more like a security. I don't know though. I'm not a lawyer, so we're not going to go there. The article goes on to read, the U.S. has not jumped on the opportunity. Classic. So Ripple's XRP asset itself sits as a possible security. So you can see they're saying that Ripple or XRP, which is the coin that for Ripple networks, it could be labeled as something else, as a security, even though Bitcoin and Ethereum were labeled as commodities. So we're going to get into this real quick, did a quick little Google search and broke down this article. This is going to talk to us about the difference between securities and commodities, because this really will help shape what your opinion is about the topic just by knowing and having a little bit more insight to this. So I thought that was interesting. So let's get into this one. All the red stuff is going to be labeled for securities. All the green stuff is going to be for commodities. So investors purchase stocks, bonds, debt, and other interests in companies, governments, and private businesses. These kinds of investments are securities. So you're buying the stocks and you're saying, hey, I believe in this company, believe that I'm going to get a return some point down the line because they're going to do well. At the same time, business purchase natural resources like oil, gas, coal, as well as agricultural products like coffee, corn, sugar, and wheat well in advance of the delivery. These are examples of commodities. So just right off the bat, what are your initial thoughts? Like Bitcoin, is it like oil and gas and coffee? You know, it is speculated because all of it's kind of still not in production or completed production. So right off the bat, it just seems like it's like a square trying to fit inside of a round circle. You know, it's just, it doesn't, I don't see it. So let's get further into this here. So we're going to go into the security sections. Most people who buy securities buy them as investments, like we talked about earlier. Stock in a publicly traded company can increase or decrease in value. Buying bonds can ensure a steady rate of return without much risk of loss. Most holders of securities keep them to fund tuition, major purchases, and retirement. Exactly right. Other investors simply use them to maintain and grow their overall wealth. Securities play an important role in the financial system, providing companies and government with capital and investors with the potential of returns. Seems to me like we would want to have Bitcoin and cryptocurrencies be labeled as securities so that more access to funding for a lot of these projects can happen. I don't know. I'm not a professional in the Security and Exchange Commission, but it just seems like very interesting here. So let's continue. Stocks, bonds, and credit default swaps are common securities. So SEC or Supreme Court had a nice little court case called SEC versus WJ Howie and Co. The court held that a security regulated by federal law existed when a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter or a third party. So it was like a very broad ruling here. So it goes on to break it down. So an investor buying stock in a corporation expects to profit from a company's success. That's a typical security. The Howie case, however, involved an atypical security. A company sold plots of citrus acres while a related company contracted to work and maintain the fields on behalf of the owners. The court determined this arrangement to be a security as well. Securities are broadly defined in part to prevent efforts to evade federal securities regulation. So it seemed like this little company found a little loophole, and instead of actually selling a product, they were selling plots of land. So that's what that case kind of got brought up for. So to me, once again, if I was just looking at this from a cursory view, it makes me think like Bitcoin and Ethereum kind of sound, they smell like a security. So let's go on to commodities. Though we're going to break this down so you have a better understanding about this. So the major difference between buying and selling securities and commodities lies in what is being sold. Purchasing stock buys a share in a corporation's ownership and control. Purchasing commodities, on the other hand, is to buy goods themselves before they actually exist. So when people are trading these, the coffees, the sugars, all that kind of stuff, they're trying to buy it today at a lower price that will be in the future, or the sellers are trying to do that. The buyers are trying to lock in a good rate so that if it does drop, they're still covered. So here we go. The purchasing commodities are a form of an investment. Buyers hope to lock in a good price in advance in order to avoid any rise in prices later on. The opposite is true of sellers. They want to sell at a good price in advance in case the price goes down in the future. These are examples of hedging. So there's profit to be made by buying low and selling high, even when the item is corn. Defining feature of commodity is that its interchangeability. One unit essentially is the same as the other. So, okay, commodity, every Bitcoin's the same, every ETH's the same. They all look the same. They can be changed out interchangeably. That makes sense. Okay, check. Commodities must meet certain minimum quality standards in markets do distinguish between different types of the same commodity. But for the most part, it's about the quantity. So we're going to get into the differences and similarities here. These are nice little highlights so that we can understand the difference between securities and commodities. So securities and commodities are both traded on markets. They're liquid, meaning they can be easily exchanged. These features invite buying and selling for whatever reason. Investor buys stock hoping for its value to rise and make a profit. An apple juice company might buy next year's apples in advance to avoid a rising apple prices should there be a bad crop. So in both situations, there's a degree of risk. There's risk involved with this. You're investing. There's always a risk. So the major differences between the two. So those were similarities. Now we're going to dive into little differences. Securities and commodities operate under different laws and are regulated by different agencies. U.S. Securities and Exchange Commission (SEC) regulates securities under the Securities Act of 1933. The Commodity Futures Trading Commission regulates commodity markets under the Commodity Exchange Act of 1936. So securities and commodities are governed by different statutes and they're regulated by completely different agencies. So it seems to me like there might have been a misclassification But I don't know if it's for better or for worse. I'd have to speak to somebody much smarter than me, but it does raise a lot of questions. And it's interesting to hear our boy, Mr. Garlinghouse, speak about this because he's obviously the CEO of another cryptocurrency. And he's still kind of waiting to see how it's going to be regulated. So I think if we can expedite these rulings and classifications, regardless of whether we call them a security or commodity, it gives people structure. And when you can start to build structures, people can start to build within those guidelines so that people aren't going off the railroad tracks. It just makes sense. US government, let's step up. Let's do this. Do the damn thing. Thank you for joining the Monday Blitz. Hope you liked it. Hope you loved it, actually. And we're going to be doing more of these every Monday. Stay tuned for a fresh new article. It's going to be coming to you hot off the presses, and we're going to be diving into stuff and learn some stuff. All right, like, subscribe, YouTube, thumbs up, rip me in the comments. Actually, do this. Leave some comments on this one if you have questions or what are your thoughts about this. My biggest thing is I want to get you involved with this so that you can learn more and learn more about the industry. So leave your comments below. What are your thoughts? Is the U.S. going to turn this around in the next year or two? Are they going to start humming these things through the pipeline and start stamping them, securities, commodities? What are your thoughts? Why is the U.S. lagging behind to China right now? Those are all good questions for you to think about. Put them in the comments.
Are you out of your mind? Are you out of your skull? How the hell you call that? Well, call it on Tom Brady, will you? Call it on those guys. I've never seen that in my life.